Hey guys, so today we're going to be talking about candlesticks. Why we use candlesticks, how can we use candlesticks when we're trading, what are candlesticks, and everything about them. Okay? So, what are candlesticks? Candlesticks are just shapes of time frames. The best way I could put it. So, a uh, a candlestick, so let's draw it out real quick. A candlestick would be almost like this. So, we'll draw a green candle. So this is basically a candlestick, and it usually has wicks, high and low. So let's go ahead and draw a high wick and a low wick. Usually it's within the same color. Okay, so a green candle, go ahead and draw the green candle on this guy too. So why do they matter in trading? The reason, really, to be honest with you, candlesticks matter in trading is because every single person uses them. Not just intraday, not just swing trading, but everything. Longer time frames, whether you're trading crypto, whether you're trading forex, whether you're trading stocks, everybody uses candlesticks. They're in a way I want to say they're the best way to see what the chart actually represents. They're the best way to see the highs and the lows of a chart and the price movement of a certain stock. So why are they shaped like that? So for a green candle, we have four things for each candle. We have the open, the close, the high, and the low. So over here, we're going to have the open. Okay. Over here, we're going to have the close. I can't type today. Okay. So this area here is going to be the close of the stock. This area here is going to be the open. Okay. Now we're going to draw what the bottom of this wick is because it looks like a wick, so it's almost like a candle, what a candle would look like, and then it has a wick. But for some reason, candlesticks have a wick at the bottom as well. Anyway, so at the bottom would be the low, and at the top would be the high. Now, why is it based off of these levels right here? So the way we discuss it is when the stock opens to form a candle, a green candle. So there's two types. You have a red candle, a green candle, and sometimes you have a doji, which is an indecisive candle. So it would somewhat look like this. It'll be a straight line, and it'll have a wick at the top, a wick at the bottom. When you think of trading, you got to think of it as the battle between buyers and sellers. So there's a constant battle for every candlestick. For example, let's say this particular candlestick represents 1 minute. So for this 60 seconds, the price went, let's say, from $257 all the way to $260 and ended up closing at $259. So within 60 seconds, this candle did this. Now, the constant war between buyers and sellers just tells us right now that the buyers have won this battle. A indecisive candle, meaning that the buyers nor the sellers are winning the battle, they're indecisive. And the bigger the time frame for a candle, we'll get into that here in a little bit, the more meaning that candle has. So for example, a 1 minute candle may not have that much meaning because when you expand it down to a longer time frame, whether it's 5 minutes, 15 minutes, and the longer the time frame, the more impact that candle has. Because, for example, we could develop a high and a low between 256 and 260 in 1 minute, but by the end of the day, we could be going down all the way to 250. So that candle doesn't really mean anything. But for the daily candle, we could have trended all the way back down. Okay? And then the third candle would be the red candle, which is the bear candle. So we'll draw a candle here. And let's go ahead and make it red. Okay. And we're going to draw a wick up top. Make this bad boy red. And a wick down low. Okay, so when we're looking at this candle, it's going to be almost the opposite of this candle because when we're looking at green candles, this the when the stock is moving up, when the stock is green, when the candle is green, the stock is moving up, right? When the candle is red, the stock is moving down. And obviously, when the candle is indecisive, the stock is moving sideways. And so, if the stock is moving up on a green candle, that means the price was coming up from this direction, and then the very next candle opened here, and then obviously more than likely made a low, went up top, made a high, and somehow ended up closing right about here. Okay, when the stock is going down, the stock would be coming down from this direction, and the next 60 seconds would be placing the open, which would be here, and the close, which would be here. Okay, now the wick has made a low, and obviously we have the low of the wick right over here, and the high of the wick right over there. I don't need to write that down for now. Okay, but the stock ended up opening at 259.36, went all the way, tested the 255 level, and by the time the candle closed, it closed right about 256.70 or so. Okay, so the four things we need to look at on a candle. We need to look at the open. Oops. We need to look at the open. We need to look at the high. We need to look at the low, and we need to look at the close. Okay. Now, each candle has a different time frame. So when we're looking at candles, let's say, let me draw a bunch of little candles real quick. So we have one candle. Let's go ahead and make it green. We have another candle. Oops. We have another candle opened here. And then we have another candle here. And then let's say in the midst of it, we have a red candle, which let's say the stock opened here, made a low to about right here. And then let's draw this one red so we don't get confused. And then we have a green, another green candle, which would be forming right about, oops, right about here. And we see this big move right here, okay? Let's go ahead and mark this one green. Oh my goodness. Okay. Well, anyway, you guys get the point. It's a green candle. Let's just say it's green. Let's go ahead and brush it in. Boom. Green candle. Okay. So, assuming in this particular case we have 5 candles, within this 5 candles, the stock opened at 255, made a high, next candle opened, made a low, and then made another high, made another high, and now we're getting into some resistance. Stock went down, and we broke the highs again. Okay. These, let's say each candle represents 60 seconds. Each candle represents 60 seconds. My drawing is terrible, so excuse me. After each candle closes, the next one opens. This one closes, this one opens. This one closes, this one opens. Okay? On a 5-minute chart, this entire move would look somewhat like this. On a 5-minute move, the stock would look exactly like this. Okay? So within the 5 minutes, we have the open and moved all the way to the high. And let's say it drew let's say we ended up having a long wick because we tested the highs, okay? Let's say we had a long wick here. So it would somewhat, and let's say earlier that day, the candle, the stock ended up going down, but then rejecting the lows and went up higher, okay? So now what we're looking at is a green candle on a 5-minute chart that went low, went high, and opened here and closed here. So now we have the open, we have the close on a 5-minute candle. And then the next 5-minute forms, and the next 5-minute forms, and the next 5-minute forms. You put those three together. Now you have a 15-minute candle. So over here, it looks like there's a lot of movements going on. The stock made a low, made a high, moved sideways within 5 minutes. None of that mattered. After 5 minutes, this candle has formed. So now we know what the open, close, high, and low for candles are. Now we can get into some common candlestick types. So I'm going to draw a doji for you. A doji has more meaning when it's in a longer time frame. So if it's a 1-minute candle, the doji doesn't really mean much. It might mean some indecisiveness and some reversals, but in the longer time frames, it means more. Okay, so let's say we are trending higher and higher and higher. So I'm going to go ahead and draw an uptrend. So we have an uptrend of candles. We have boom, an uptrend, boom. We have another uptrend, boom. And then the stock has moved up so much that we're now trying to go higher. So then the stock will more than likely open here and then go down, and it becomes indecisive where we draw the high and low. So we have a long wick. Excuse my crookedness, but you guys get the point. And a long wick down here. Okay. This is what a doji would usually look like minus this crookedness. Okay. Just imagine a straight line. Okay. So let's assess this right here. It doesn't matter if it's a 1-minute candle, a 5-minute candle. Let's just assess it real quick. So we had an open here. We moved up higher. That's about $2 move. Then we moved up again. Then we moved up again. Regardless of these, right? Let's say we had some wicks here. Okay. We kept moving up higher and higher and higher until finally we reached some sort of resistance. Now, if you guys don't know what resistance means, it means when a stock is moving up and it encounters some sort of stop or some sort of reversal from that point, which is $259, and now we encountered some downtrend, some reversal. Now we have that point as a resistance point. Earlier that day, we had a support point right here. Okay? The difference between support and resistance. Once a stock breaks resistance, that resistance now becomes support. So imagine this. Let's go back. Let's go back way back here. Imagine this was a resistance area, and we had a bunch of candles here. We had a bunch of candles here going down, moving up, and we finally tested this level. Let's say we tested it earlier, we couldn't break, we fell back down, and now we tested it again and we finally broke out. This was a resistance area, but now since the candle has broken, and not only broken that level, but broken with good volume. Obviously, the longer the candle, the more volume it has. What is volume? It's just the amount of shares that are being bought and sold. Usually you can see it at the bottom of the chart or you can have some sort of an indicator that lets you know how many shares are being bought and sold within that given candle. So let's say 60-second candle. On average, a 60-second candle has about 300,000 volume. Let's say this one, after it reached the resistance point, it gained some momentum. We got a lot of buyers and probably a lot of people closing their shorts, which ignited this volume to break out of this level, which is the resistance area. Now let's say this candle has 600,000 of trading volume, which means it's an indicator, meaning that we are breaking this level with strong momentum. That means the buyers are confident the stock will move higher. Once we broke this level, now this level becomes what we like to call a support area. Okay? Once the stock breaks above it, it becomes support. Just think of something like the floor and the ceiling. The floor, if you're standing on it, it is supporting you. You are above it. Imagine yourself as a candle. You're this guy right here. You're standing on the floor. It is supporting you. You're trying to go to the second floor, but somehow you just want to jump through it. When you want to jump through the ceiling, well, what is the ceiling doing? It's resisting you. So once we break that resistance, it becomes our support. Now we're in the second floor, and then we jump again. We're in the third floor. Just think about it like that. Makes trading a little bit easier. That's what I had to do for a long period of time. A lot of people overcomplicate these things. It's very very simple. Um, what we like to consider looking at the chart and looking at candlesticks, what we like to call it is technical analysis. You have two things when it comes to trading. You have candlestick reading and chart reading, and obviously chart patterns and all that stuff, support, resistance, breakouts. So all of that is considered to be technical analysis. Fundamental analysis is basically looking at the company's history, looking at earnings reports, looking at last year's losses, last year's gains, looking at news. All of that is fundamental analysis. Now, I always say that they are both as equally as important as each other. Um, it's just that you can become biased when you do a lot of fundamental analysis. So when you do a lot of fundamental analysis and you're reading the news, you can get a little confused and may draw a bias to, let's say they have news of the stock is going to go down today, and now you're thinking the stock is going to go down, so now you're more biased to maybe taking profits too quickly or shorting the stock or whatever it is. And so when you're doing fundamental analysis, I would say treat everything with a grain of rice and try to be as unbiased as possible. When you're doing technical analysis, it's kind of the same way, but history always repeats itself. So if you've seen, how do we know this is going to be a resistance area? Well, probably if you look previously, the stock came down. Let's say this level right here came down, tested this area, went back up, came down again, broke this level. Now, I wouldn't treat this as now a resistance area because you can't just want it. Technically, you want the stock to break below, you want it to try to go back up, test that level, and fail. On that second failure, you want to consider this now a resistance area. Okay? Then we look, obviously time frames ahead. Now we have this area as a resistance area. You notice that I don't call it a resistance and support line. I call it areas because it's not to the T. It's not going to be, okay, this resistance is at 251.35. No, I mean there because when you're thinking of trading, people are placing buy and sell orders around these levels. Those levels are not going to be 100% accurate. So there might be like a dollar or 30 cent, 40 cent fluctuation depending on the stock's price, right? So like Tesla, a dollar move may not be that big because it's a $252 a share stock. But for example, like I don't know, any other stock, let's say it's a mid cap stock about 30, 40, $50, a dollar move is a lie. And there's a psychology behind the dollar moves. We'll talk about that in a different time period. But this, oops. The psychology behind dollar moves, meaning that usually I like placing my buy and sell orders around whole numbers because no one's going to place a buy and sell order around 234.26. It just doesn't make any sense. You want to be rounded off, and whole numbers mean more when they're bigger, right? So like for every dollar, that's a whole number. For every $5, so 235, 240, 245, and then and then the $10 moves and obviously gets bigger to 50 and 100. Anyway, that's a different story and a different time period, but now you guys kind of understand what the gist is. Um, going back to this, I like to go off tangents. I do apologize, but now you're kind of getting everything together. Um, we moved up past this resistance area. Now it became support. So if the stock falls below this area, you want it to see if it can hold this stock this area. And if it does hold this area, then some people may place buy orders, or maybe people are less optimistic and may place short orders. But depending on the battle between buyers and sellers, we come to see if it is an actual support area. Once we establish this as a support area, the stock breaks out. It goes to the next resistance area. The next resistance area, let's say it's 259.47. And now the stock is facing some new sellers because you got to think as we move up or as we move down in a stock, there's constantly people placing buy and sell orders. That's why when you place a market order just means that once you place a buy on a stock, it buys it automatically. It doesn't matter if it's off, which we like to call slippage. It doesn't matter if it's off by a few cents or not. You just want the stock to be bought as fast as possible. A limit order is basically when you place a specific buy period. So let's say I want to place this at 249.45. That's a limit order. Okay, but a market order, I like to do market orders, sometimes limit orders if I have a swing or if I have a longer trading position. But we obviously come in, we break out of this area, and by the time the candle ends up closing, and that's how we determine a resistance and support areas, is if the candle closes above or below. Because if it closes above, then we broke that resistance area, and obviously the longer the time frame of each candle, the more meaning it has. Because at 1 minute we could go up 2, 3, 4 minutes, and then the fifth minute comes down and closes. Now if you look at a 5 minute time period, it would look like the stock faced resistance. I'll show you guys an example. And let me just finish this real quick. So we break out with some good volume. We come back, we test, and now it's indecisive. Now this is a doji. A doji just shows indecisiveness, which is another indicator for a possible reversal. Now, two things the stock could do. I don't really like trading dojis, but two things the stock could do is now that it received a indecisiveness, the stock can go back down, maybe try to test another support area, and then possibly break out or go back down again and test the previous support area. Um, this just shows indecisiveness. Whenever you see a doji and the bigger the time frame on that candle, it just means indecisiveness. Now I'm going to show you guys what a actual breakout looks like. So we draw a big line, and that's going to be our resistance area. Our resistance area. So we have candles go up. Sorry if they're red. The candles go up. Now we draw them a little more meaningful so you guys can understand. Candle go up. It tests this level. It doesn't break out. It tests it again. It doesn't break out. It falls back down. It falls back down. And then let's see, we do a couple more of these things, which we like to call consolidation. Consolidation is when the stock is moving sideways. A stock can move in either three directions: up, down, or sideways. Up means the bulls are winning, down means the bears are winning, and sideways means there is indecisiveness. Usually, if you enter a stock and are looking for a certain breakout and the stock is just consolidating, you're better off taking your profits and trying again, or better off just closing the position, taking a small loss, and maybe entering in a different time period, because the longer the consolidation, the bigger the breakout. But at that point, you're just gambling because you don't know if this breakout is going to be up or down against you. And so now we finally break out. We finally break out. Excuse me. And as we break out, we form another candle. And then 1, 2, 3. Let's say this is the fourth one. And then after the fourth candle, we encounter some resistance. And then we see a big decline, right? So, and this just looks fucking terrible. Oops. Oop. This just looks terrible. Um, excuse my mouth. So we break out and we somehow get into some resistance. Excuse this chart. I was trying to find a way to write this. And then it falls back down. As it falls and it closes, we have 1, 2, 3, 4, 5 minutes. What the 5 minute candlestick did is this right here. It opened here. It went up all the way here. And by that, it went up, it did this. Usually you guys would see this. And boom. And it did that. Now, I'll show you guys the wicks. It did this. And it did this. So on these 5 minutes, it looked great. We broke out of the resistance area. We got some new levels. That's why I like trading on the 1 minute candlestick. So I like looking at the 5 minutes, the 15, and the daily. And then to execute my trade to make it as accurate as possible, I use the 1 minute candlesticks. For just accuracy, because I don't want to be off by a few cents, because a few cents down the line, a year down the road, with as many trades and as many shares that I buy every single day, it costs thousands of dollars, plus the fees that you have to pay. So after these 5 minutes, we broke resistance. Yay, broke resistance. Now we're off. Psych, we came back down. We got into some resistance. Sellers came in, brought the stock back down. Let's make this guy. I can't even. Okay, this is a red candle. Boom. Incorporate resistance, fell back down. On here, what it looks like. Ooh, not good. On here, what it looks like, that the stock tried to break out, right? And then previous 5 minute candles, let's say previous 5 minute candles came over here, blah, 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 and then we broke out. As we broke out, we incorporated the second point of resistance area, and sellers came in. And by the way, this area, so that means this entire area is really considered resistance. Okay? Sellers, 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 seller, sell orders, sell orders, sell orders, profit taking, drop the stock back down. So now we failed to break resistance. There's another indicator, meaning that if you fail to break resistance, the stock is more than likely going to go. Now, if the stock is very optimistic, there's some good fundamental analysis, fundamental news behind it, a catalyst. So never trade a stock without any catalyst. Catalyst just means there's a reason for it to move that day. Don't trade a stock that has no news, because then it gets a little hard. You want to have some momentum in that trade. So the stock comes back down and then eventually breaks out, let's say. But on the 5 minute, we incorporated the resistance area, and we fell below, and the 5 minute closed below the resistance, which means we failed to break resistance. On the 1 minute, it looked like we broke resistance. And obviously, after 5 minutes, 15, 20, 25, 30, 35, we broke out and made new highs. And then eventually, after 2, 3 hours, we fell back down again. Now, if you look at the 4 hour candle, 4 hour candle did this. 4 hour candle, a 4 hour candle did this. Right here. And 4 hours. 4 hours opened here, and then by the end of the day, it closed here. Whatever. I mean, it's 12:30. Whatever. Just assume this is 4 hours or daily. Whatever. Now you guys get the point. So, three things, four things, four things. We have maybe not so close together. Maybe not so close together. To wrap this up, to wrap this bad boy up, boom, 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 boom. Okay, to wrap this up, on a green candle, the open is at the bottom. On a red candle, the open is at the top. Okay? The close of the green candle is at the top, and the close of the red candle is at the bottom. Okay? And then the wicks. And the wicks just really show that the candle went to that direction and went below that direction, and by the time the candle closed, it formed here. So we like to call this full space, we like to call the body, and then these are the wicks. So again, you have the body, and then here you have the wicks. John Wicks. Okay? So now you know open, close, high, low. Open, close, high, low. Okay? Now you know what candlesticks are. We'll go into some, I just tried to cover some support resistance areas to show you kind of how the candlesticks work. Later on, we will break down some other stuff to help you understand this a little better, but hopefully you kind of get the gist of it. Obviously, the bigger, let's do it. The bigger the candle, the uh, the higher the volume, which equals momentum. Okay. And the third candle would be the doji. And doji just means doji. And the doji just means indecisiveness between buyers and sellers. Remember, these are Japanese candlesticks because Japan, during rice trading back in the 1800s, I believe, or 1700s, came up with these candlesticks. And remember, the longer the time frame, the time frame, the the longer the time frame, the more meaning the candle has. Okay, excuse my writing. I'm an immigrant. The longer the time frame, the more meaning the candle has. Okay, so 1 minute means a lot, 5 minute means a little more, and so on and so forth. I'm not gonna trade a 1 minute candle and hold it for 20 hours. Okay, because after an enough longer time frame, my strategy will be proven wrong or my setup will be proven wrong. Trade according to what that time frame is. Okay, another text right here so you guys can know. I'll do it kind of like so. Trade according to the time frame you are looking at. Okay? Trade according to the time frame you are looking at. Don't trade a 5 minute candle and wait 25 minutes, okay? I'd only take a 5 minute candle based on confirmation. Confirmation meaning like I said earlier, we have a resistance area. Confirmation meaning the candle went up and closed above. Now I can maybe wait for some sell off, holding support, and I could start buying. Okay? And when I buy, I usually like to look for the next whole number or look for the next resistance area, and I'll start scaling out, scaling out, scaling out. Okay, that's pretty much it for candles, guys. Now you guys know what the open, close, high, low is. You know what a doji candle, you know what a bear candle, you know what a bull candle is. Um, Thank you guys for watching, and I will see you guys next time.